I lost the tie that I was wearing yesterday. It was constricting my breathing. How many of you are either in or thinking about entering an accelerator? Good. And I think through this conversation, what I want to do is be a useful resource to help you understand what you can expect when you get into an accelerator. So my name is Roberto. I am the Vice President of Emerging Markets, specifically the Middle East. Specifically the, oh, that got loud, the Middle East and North Africa, to include Southeast Asia, Australia, New Zealand, and any other emerging market. I'll talk about that in just a second. I wanted to recontour my conversation today because of all of the speakers before me who I think have actually done a fantastic job feeding you a tremendous amount of useful information. So if it's helpful, I'm going to make a few changes to what I'm about to talk about. But one of the very important tenets of Techstars that is different from every other accelerator out there is we decided we weren't going to be in Silicon Valley. Because our thesis is that great entrepreneurs, great ideas, the next Uber is everywhere. It's in Istanbul, it's in Riyadh, it's in Nairobi, it's everywhere. So we decided at the very beginning of the inception of Techstars to create accelerators in market. That's the big difference, okay? One of your homework assignments, if any of you are interested, is you can Google me. Thank goodness for the internet. I'm actually very easy to find. But besides the job that I currently have at Techstars, which is only 6 months old, by the way, I am an active mentor in all of the Techstars programs, in all of Founders Institute, as well as an active angel myself. So in my personal portfolio, I have about 30 active investments. In my fund of funds investments, the number is a whole lot larger, and thank goodness for that because that does really, really well. My angel investments, don't know yet. We'll see. That's half the fun. And I have been an operating executive, typically at the founder level, CEO level, board level, for companies from $0 in revenue to $300 million in revenue. So I hope that that experience base can bring me some valuable insight to be helpful. So at Techstars, what we look for, and you've heard this earlier, is team, team, team. If you've got a great idea, fantastic educational credentials, maybe even some great work experience, but you're only one person, there's a very high likelihood that someone at Techstars will say to you, go find a co-founder or two, right? And the reason behind that is building a startup is hard. Anyone that thinks differently is still daydreaming. It takes a lot of work, and you cannot do it alone. So that's one, team, team, team. I cannot de-emphasize that enough. That is the critical measure. The second is product market fit. Now, we've heard traction, which is very important, and product market fit encapsulates that to some extent. But in Techstars, we ask the question, here's a great team. Are they trying to solve a problem in a large enough market that in 3 to 5 years, this company could be making $100 million in top-line revenue? Now, that's a developed market number. That's a number for the US, for the UK, for Germany. In the emerging market space, that could be a much lower number. In 3 to 5 years, could you be a $50 million business? Okay? One thing I would encourage all of you to do, and this is a behavior I see in the emerging market space, is do not think small. You are going to have to work just as hard to create that first $1 million as you are to create the next $10 million. So think big. Take your idea and ask the question, can I apply this globally? Okay? There are no more barriers to entry now in today's world. You can sell your product across the internet. You don't need to get into an airplane and go fly somewhere. Deals get closed over the net more and more each day. Okay? Think big. So product market fit, how do I solve a big problem and actually get to that trajectory that makes me a viable business? And why do we pick 100 million in the Techstars model? It's because the third criteria is this business attractive to a venture capital investor? Okay? How many people here have raised money for their company in excess of $500,000? Okay? Small show of hands. How many from 250 to 500? Small show of hands, okay? So what that tells me, unless I'm not asking the right questions, is that right now everyone is bootstrapped. You're trying to make your business run under your own power. How many of you have gone out to friends and family? Very good. Now, one of the things I like about friends and family money, people give you the money because they love you, they trust you, they believe in your dream. The thing I don't like about friends and family money, and it's not a negative, it has emotional hooks, right? You feel terribly if you lose the money. The other thing about friends and family money is unless you have a rich uncle or aunt, there's never enough of it to go around, right? So if you're thinking big, I will tell you that in Techstars today, as of today, we have put over 600 companies through our accelerator programs. We actually operate accelerators in 24 different locations. If you go to techstars.com and research where we are, most of them are in the US. We have a few in London and a few in Berlin. And I would like to see an accelerator in Istanbul. I'd like to see an accelerator in Dubai, in Cairo, in Beirut. We're looking at these various markets. And if I use the US as again, just a proxy, the average company in the 600 companies that we've incubated has raised $3 million by their Series A. And they typically have gone into the seed round with some friends and family money, maybe 100,000. They then raise a larger round, somewhere between 500 and 750, and then they're ready for Series A. Okay? Series A usually is $2 to $3 million. Again, this is in the United States. If you cut those numbers in half, I think that may be a fair representation in the emerging market model. Okay? So our goal as a company is to find great teams, great product market fit, the ability to grow that company to 100 million in revenue, and I'm going to say for the emerging market it's probably 50 million in revenue in 3 to 5 years, and then find the venture capitalists or the angel investors that can help put equity dollars into your pockets so you can go grow that business. Okay? That's the Techstars model. And I think we are probably the #1 company out there that does this worldwide. So we come to you, you don't come to us. By the way, if any of you would like to, how many here have a fintech idea? Okay. If you want to come to, I'm going to jump the gun here by just a few days. We have a startup accelerator that will be happening in South Africa. We have an accelerator in London, and we have an accelerator in New York City in partnership with Barclays. So if you have a financial technology idea, apply to one of those. I will warn you ahead of time, it's very competitive. Okay? Anyone here into robotics? I saw a bunch of robotics people yesterday at ITU. We have a partnership in San Diego with Qualcomm to develop robotic startups. So take a look at the business because I think you'll find an interesting fit there. You can come to those locations for 3 months, but if Techstars isn't appropriate, find another accelerator in your market and understand that that accelerator's job is to teach you your story. I've met so many entrepreneurs, and we heard this earlier today. Telling your story is so important. And it should be a very natural international concept, because how many of us here watch movies or television? Everybody does, right? We want to hear a great story, and yet most entrepreneurs actually do a terrible job the first time. Okay? Have you ever heard this joke about the engineer where you say, "What time is it?" and they tell you how to build the wristwatch? Don't be that person, right? Listen to the question, answer the question directly, keep it short and sweet. Right? So that's the Techstars model. I want to ask you another question. As an entrepreneur, where I have actually been in your shoes, if someone listened to your idea and gave you $142 million, think about that, $142 million, could you fail? Absolutely. Absolutely. How could you fail? That's a lot of money. You could steal it. It's illegal or immoral, right? You could squander it. Lots of ways to squander it, I'll tell you how. Or you can have exogenous events that you just don't see coming, right? An act of God, war, something. So my story is in 1998, I came up with this idea to consolidate the internet across all of Asia, starting from Beijing all the way down to Auckland, New Zealand. And the way we did this was we went out and we acquired 22 companies in that geographic spread. These were all small internet service providers that sold access for commercial companies as well as individuals. So in February 1998, we went from 0 revenue, and in the course of 1 year, we grew that revenue to 100 million, top line, all by acquiring those 22 companies. And in June of 2001, we filed for an IPO. We filed our S-1, which is the U.S. document for a public float. We spent almost a month, and I kid you not, it was 7 days a week, 24 hours a day, working with attorneys and PricewaterhouseCoopers to generate the financial statements for the SEC. And we filed the amended S-1s. And what stopped the IPO, and it was my choice to kill it, was we had about 50 million left in the bank, but 9/11 happened. The world changed. There was no IPO that was going to happen in the United States at that time. That's the exogenous event. Otherwise, had that event not taken place, the IPO would have gone forward. My prediction then, and I stand on this conviction even today, it would have been a bad IPO, because the company was losing money. There was no story towards profitability, right? We were just another big-name company. You know these unicorns that you hear about today? What's the problem with a unicorn? Yeah, it's actually not real, right? That's why it's a unicorn. It's a fictitious animal. The problem I find with a unicorn is that it's almost a romancing story to the entrepreneur to say, focus on the valuation, not on the business model. Right? So just because you have a $1 billion valuation doesn't make you a $1 billion company. That's the one challenge I have with that. So what we did was we raised a lot of money, and how we burned it, we were burning $8 million a month. Imagine that, $8 million a month. That was the burn. The operating expense was about $8 million a month. So $16 million a month was what we were spending effectively, right? And we had a warehouse in Kowloon in Hong Kong that was filled with T-shirts, with lanyards, like the lanyards you have around your neck, coffee cups, portfolios, everything and anything that would go out to a trade show, for example. We had this very sexy advertisement that was shot from a helicopter that flew very low over Victoria Harbor, showing our office building, which was on the 16th floor of a skyscraper, right on the harbor. None of that sold $1 of revenue. None. So the CEO at the time, because I was too young to be CEO, I was only 38, was fired by the board. I stepped in, cleaned up the mess. We actually took the burn rate from 8 million to 1 million, and guess what? The top line never changed. Right? So we were doing all the right things to get that business towards that IPO trajectory, and yet it still didn't happen. And I tell this story because money was not the driving factor. We had plenty of money. In fact, I ended up giving back almost 50 million to the investors. Market opportunity wasn't the problem. We had the market, we had the revenue, we weren't profitable yet, that was a different story, but we had an exogenous event. So as an entrepreneur, there's many forces working against you, and as you go through your career as entrepreneurs, think about the team you form. Complement yourselves with the weaknesses that you have. Find somebody else where that's the strength, right? Secondly, think about a big product market fit. You are going to work so hard. Reward yourself by attacking the world. You've got a great idea. Take it to the world. What if you don't have a big product market fit? Is that okay? I say sure. If you've got a great idea that's a wonderful income substitution business that throws off $250,000 a year that you can pay yourself, great. But don't go ask for venture capital money, because the VC is not into that kind of return curve. They need to see big returns. Okay? And then the last thing is, think about what's happening in the world around you. This is what Techstars is doing today. If we enter the emerging market, some of the challenges that I face, it's not the ideas. It's government regulation. Which countries have the most friendly regulations that we can enter? Do you know that in some countries, you can't go bankrupt? Because if you go bankrupt, you, the entrepreneur, goes to jail. Right? That's not an easy market for the kind of business we do. In some markets, you cannot do convertible notes. In some markets, you can't do 2 classes of stock. So these are mechanics that I have to think about. So I'm looking at the globe, thinking about where do we enter next. As entrepreneurs, you should look at the globe and think about where can I make a lot of money. So let me shut up and ask you what questions you have for me that can be helpful as you continue this journey of yours. Anybody? Don't be shy. You can find me afterwards. Do I still have anything in Kowloon? I have a lot of friends in Kowloon.
Friends are for life.
But the remaining business that we had was sold to Hong Kong Telecom. So as the crisis occurred with 9/11, we ended up breaking up all of those companies into 9 separate subsidiaries and sold them off to the various telcos. So the business entity is not there, but the business activity is.
So is there a startup that applied for Techstars?
Oh, that's a great
Who
question.
applied for Techstars? When? This year. What happened?
Then it didn't work out.
Ask him a few questions.
He has my business card. He's going to send me the...
I'm sure he does. Because this is, like, your experience might be relevant to other startups. Ask them before you apply, for example.
I don't know what I would have asked him, but I think what was missing was more traction. And I think you have talked about that.
We've talked about this,
private.
yeah. Just to elaborate on this question, if you applied to Techstars, why wouldn't you get in? This year, this summer in June, I was part of the selection committee in Boulder. We had over 800 applicants for 10 slots. That gives you a sense of the competitive nature. And so we have to pick from those 800 and we have to ask the question, is there a team? Is there a large market opportunity? Can it be 100 million in 3 to 5 years? Is this a section of technology that the VCs would be interested in? Okay? Doesn't mean it's a bad idea, but against those 3 criteria, we have to make some choices. A specific example is, how many people here have an ad technology startup idea? Ad technology, advertising technology, okay? The interesting challenge with ad technology is it's a very, very important tech to help maximize margins for the retailer, for example. It's fallen out of favor in the United States with the VC community because they over-invested a few years back, and so their appetite is gone, right? If anyone here has an idea around solar technology, let me tell you, that's a fantastic market, but it's been over-invested in, right? And you can see these patterns. What's the other over-invested technical vertical? Cleantech, right? Years ago, Kleiner Perkins, one of the shining stars in the valley, poured more money into Cleantech and hasn't seen a return. So they're naturally gun-shy.
Social media.
Social media. How many more Facebooks, Snapchats, Instagrams, blah, blah, blah do we need? So
Commerce. Usually, the emerging markets are catching up. As soon as something tries to pop up in US, then they think, okay, I can copy that. But they don't realize that that market is not proven. If something wrong happens, you're onto the wrong thing. If it's not your passion, if you're too opportunistic on this, you have no idea what will happen. Cleantech was the biggest thing. We have solar startups in our accelerator that are struggling to raise funds. Although they are 10 times better than the alternative, everybody's very, very, very skeptical. So it's very hard for IoT companies now. I think IoT is still okay, but there has to be maybe niches. But last one, okay.
Ask a good question. And a question. I don't give my mic for cheap. Don't do what you did yesterday.
hang on to that mic, that's very expensive.
So my question is, when I'm pitching to investors, you said that if I'm in the US, I should show 100 million revenue for you to be interested. And if I'm in an emerging market, it is half. Well, I can say that I can make $100 million even, but that would be a lie. It's not based on any facts. So in my pitch, I'm being sincere, okay? I'm realistic. I'm giving a number out of tractions that we got during the past 3 months. I'm estimating to have $1 million within the next 24 months, based on facts, based on what our existing clients is spending. So is that bad? Should just lie and say, hey, I'm going to make $100 million because I'm interested in your money, instead of being sincere and just said, I'm going to make just $1 million.
You ask a very, very important question that I deal with all the time. First thing I'd say is know your financial model. And if you know your financial model, then it's a defensible starting point in your story. That's one. Number two, understand how your business can grow. And if you can grow to 10 million, 50 million, 100 million, that's great. Tell me how you're going to get there. Because if you just make up a number, I don't know how you're going to execute to it, right? But what I would potentially do is to say, here are proxy examples of competitors in my space. Look at how big they've gotten. Here's how they got that big. I mean, you have to weave together a very comprehensive story, right? If you're talking to a VC that needs to see a $100 million revenue curve in 3 to 5 years, you're talking to the wrong VC. Because if your business model is less than that, go find that VC. Right? In this conference, I've already heard a number of speakers say, money has a personality. Pick the right personality. Because if you don't, you're going to be spending an awful lot of time talking to people with deaf ears. Because they only want to listen to the $100 million story. I can't write a check by myself for a $100 million company. I'm not that big. But if you tell me, here's how I get to 10, here's how I get to 20, here's how I get to 50, I have a lot of time for you. Okay? So know your financial model. If you don't know your financial model, and by the way, I hear that every single day. Because as an investor or as Techstars, one of the questions I'll say is, how do you make money? And then I get this long, long conversation that tells me nothing, right? And I haven't even started. I can rattle off, what is your margin? What is your contribution margin? What is your gross margin? What is your net margin? What are the 3 levers that you can pull in your business to drive that gross margin up? And remember, this is not a criticism, but this is where the team matters. How many here by a show of hands are engineers? Go find a fantastic business partner. Okay? It took me years to learn how to speak the language of business, to know about margins and all the financial terms, right? If you talked to me 30 years ago when I started my first company, I would actually tell you how to build a watch if you asked me the time. That was me, right? And I had to make this elaborate, emotional conversation to tell you why I had the best solution you'd ever seen. And the guy that was listening to me was going, oh my God, stick needles in my eyes, this guy is so boring. Okay? So learn the financials, be honest, and stretch. If it's only $1 million a year revenue business, I would say to you, raise friends and family money, get to the million, see what happens. Okay? But if you really think it's a great idea, I would ask you to tell me, how do you go from 1 million to 5 million to 10 million to 20 million? If you can tell me that story, the economics change dramatically.
And if you can't tell that story, it means you're not in a big enough market, which is the biggest turnover for VCs. If you can't estimate to go to $20 million with all the resources you have, then it means it's a small market, which means VCs will not be interested. Angels might be, individuals might be. So there are levels, like game levels, and that depends on how difficult the market is on which game you're playing.
One last thought for the crowd. I want to give you an understanding of risk. So in a venture capital portfolio, this is a typical set of numbers. I make 10 investments. 7 of them will go out of business. I already planned for that. 2 of them may return the capital and a little bit more that we put in. 1 has to make up for the entire portfolio. Those are really shitty odds in anybody's vernacular, right? So that one company has got to do it all. There are VCs today, Techstars being one of them, where we actually put money into seed investments, that $50,000 to $500,000 category, because they're small enough bets that we're trying to see what that entrepreneurial team can do with a small amount of capital quickly, right? And today, all of you are in the very best place to be a technology company because everything's in the cloud. Your compute engines are in the cloud, your storage is in the cloud, your distribution's in the cloud. 10, 15 years ago, we didn't have that. You had to raise bigger amounts of money because at least $250,000 was set aside just for hardware servers that you had to keep in a telco closet box somewhere, right? So now is a fantastic time, but please be cognizant that you're asking VC investors for a precious, fungible resource called cash that they know they are going to lose a lot of. Okay? Thank you very much for your time.
Great. Thanks, Albert.